Hey, good evening on a wonderful Friday night. Portable mortgages explain, keep your rate when you move. So, a lot of changes or a lot of things are being looked at to work on creating affordability for home buyers. We had the 50-year mortgage that was talked about earlier in the week. We've also had, of course, people talking about the portable mortgage. So, what the portable mortgage is, so the portable mortgage, hold on. So, the Trump administration has another idea to make housing more affordable. Let homeowners take their mortgage rate with them when they move. On Wednesday, Federal Housing Finance Agency Director Bill Pulte said the administration is actively evaluating so-called portable mortgages. The proposal aims to address the housing market's lack of supply. The administration stepped up efforts to address housing affordability this week. Pulte, who oversees Fannie Mae and Freddie Mac, and the two, which are two government-backed entities that guarantee more than 50% of U.S. mortgages, said that also weighing in how to make mortgages assumable and whether they need to introduce the new 50-year option. So if you hadn't heard about the 50-year mortgage, I did a video on it. Essentially, the 50-year mortgage is where instead of being a 30-year period of time, there's 50 years. And that helps the borrower create some affordability with, 20 additional years. However, and that also allows for them to have a lower payment. But over the course of those 50 years, the borrower pays double what they would pay in interest. But I did a video and you should go watch it and comment whether you'd be willing to do a 50-year mortgage if it created more affordability to you. So how a portable mortgage works is a portable mortgage allows a borrower to transfer their existing mortgage and mortgage rate to a new property when they move instead of taking out a brand new loan. And this is the example they use. For example, imagine a homeowner selling their house for $400,000 with half of it paid off with a 3% mortgage. By having a 3% mortgage and half of it paid off, let's say that the other house is $450,000. The buyer would need to cover the additional $50,000 either in cash or through a second or smaller loan issued through the current interest rates. So essentially, if a borrower had if they had a mortgage and instead of paying their house off, they take that $200,000 and their 3% interest rate, and that gets applied to the home that they're looking to buy. Now, what happens is they still have the balance of $200,000 with a 3% interest rate on that new house. The additional funds are going to come from them getting financing on the additional $250,000. So on that additional $250,000, they're going to be evaluated on today's interest rates. So essentially, it's going to be a blended rate. So you will have a lower rate on that last 200,000, but the other 250,000, you will have a higher rate because you are getting financed currently. And when we say higher, it's whatever the rate is at the time. So if the borrower is looking to, if they want to move from their current home and they want to keep their rate, they can, and it's portable, meaning you take it along with you. The premise behind it is that you're supposed to create more they're supposed to create more inventory on the market because people who are locked into their homes at 3% interest rates but want to move but don't want to lose that rate get an opportunity to move, and then they don't lose the rate. However, if they don't have the cash or the extra money, they lose the rate on the additional funds that they are, on the additional funds that they're financing. So, so that's the portable rate. Now, that's something that the administration is working on or looking to see if it's viable. Right now, the portable mortgage, to be honest with you, when they announced it, that was the first time I had ever heard of a portable mortgage. So I did some research on it, and the portable mortgage is big. Well, not big. It is used more so in the UK and Canada. So the US has a lot of, not necessarily red tape, a lot of regulations that they would have to figure out how to maneuver around being able to port the mortgage. A couple downsides to it. It still doesn't create more affordability, in my opinion, to home buyers, but it does create more inventory. By creating more inventory, it's an opportunity for more buyers to purchase because sellers can get out of that house. But it also could potentially create prepayment penalties, because if people port their mortgage to a different mortgage too frequently, then they're going to have, mortgage companies aren't going to get their investment out of that property. Then also it could affect the mortgage-backed securities, because they no longer may be as attractive, because they're not going to be holding on to those mortgages as long, because it may get ported to a different lender. And then the other thing is, so the person's qualified on that property when they got, let's say in 2020, when they got a 3% interest rate, but between now and 2020, the person may no longer have, the ability to purchase a home, because they have to requalify, or they may have too much debt, or they may have retired and make less money than they did when they purchased. So I don't think it cures the affordability for buyers. Again, to me, in my opinion, I think it creates more inventory for buyers, but it benefits a current homeowner, the current person who currently owns a home already. It benefits them more so. Couple that with the 50-year mortgage, where in a 50-year mortgage, yes, you save money, and you can use that money. Let's say it's $219. You can use those funds and invest it in something else. You can use those funds to pay down on a home. But if more people are looking at it as, hey, I'll never own this home. So, they're looking to put things into play to try to create more affordability. And I think that more affordability is not only trying to be creative. I think interest rates need to come down, and housing prices need to come down some as well. Combination of both will make it more effective. What are your thoughts? Have you guys heard anything on the portable mortgage? Do you think that it's viable? If you currently own a home and you have a low interest rate and you're watching this video, would you want to take your current more interest rate with you to another house and then finance the other portion of it? Let me know. Let's see. So what if there is no mortgage on the current property and wanting to move and buy a new property? So then if you don't currently have a mortgage, if you don't have a mortgage on your property, and you're looking to buy a new property, then it's the same scenario as it would be now. You just get financing on that current property because you have no mortgage to transfer the lower rate to. So you would essentially be financing a home again. And you can decide whether you want to sell the one that you have with no mortgage, or if you want to use that for a rental, but it doesn't change that process there. Great question. Again, guys, we're talking about portable mortgages. Explain, keep the rate when you move. And, is this a viable, do you know enough for it to be viable for, housing affordability? Have you, heard anything on the news? Like, what are your thoughts behind it? If you are watching the replay, comment below and let me know, hey, would you be willing to move from your home with a low interest rate and take that rate to a new home so we can create more inventory? So, if you would comment the word portable, and then, we can see what the consensus is. If you have any questions, guys, and I normally don't jump on Fridays, but I wanted to discuss this, and I won't be on for too long. I just want to get this video out and talk about the portable mortgage and see if anybody had any questions pertaining to it. I'll be going live on Sunday as well. On Sunday, I will be going over the removal of credit scores from conventional loan, the credit score minimum requirement from conventional loans. Another thing, guys, so while I have you on here, there is a let's just assume we're also seeing a record number of foreclosures throughout the United States. Actually, I think there was a 20% uptick in October in foreclosures. And one of the highest places with foreclosures is the Atlanta market. I can't use as a rental. It's a co-op in New York, owner occupied. What are your thoughts on me to stay where I can versus buying an investment property? I can't use as a rental. It's a co-op in New York City, 100% owner occupied. What are your thoughts for me to stay where I am versus buying an investment property? I'm always for someone purchasing an investment property. In terms of staying where you are, that's all going to depend on if you're looking to sell it and then buy another property, or an investment property can be purchased, and you've got income coming in from it. You probably won't get the same thing as what you have now. And it also depends on if you're going to look to reinvest in New York, or are you going to Jersey, or are you going to Pennsylvania? You want to slide down to Delaware? Like, where are you going to look to invest? If you're in a position where your current home is paid for and you have the means of buying another property to invest, I would definitely look into multifamily. And don't be afraid to go outside of where you live at to find a deal. New York has, higher rents, but the cost of houses are higher as well. So you want to make sure that you invest in an area where you can get a good rate of return. If you're watching and you have any questions pertaining to home ownership, or about the portable mortgage, or about 50-year mortgages, drop them below. I'm here to answer your questions for you as well. And thank you, Mo Sim, for asking those two questions. So again, if you think that portable mortgages are a good deal, then let us know in the comments. Again, I told you what I thought. I think that it helps someone who currently owns a home, and it allows for them to buy another home and still keep their mortgage somewhat lower because they've got whatever's left over on that lower interest rate. However, it doesn't create the affordability for a single, not a single person, but for a first-time home buyer, because they're not benefiting from the lower rate. Thank you. I will look into states that are landlord friendly. Multifamily has been on my radar. Thanks again. No problem at all. No problem at all. Again, if you're watching this live and you have questions pertaining to portable mortgages, 50-year mortgages, Homeownership, drop me a question. And also, if you're watching the replay or watching live, do me a favor. And I want to see what you think could help with housing affordability. There's really no, I mean, there's no wrong answer. It's your thoughts and what you think needs to be done to get to get housing back intact or making it more affordable for first-time home buyers, and not necessarily first-time home buyers, for home buyers in general. You know, our senior population who isn't going to make any more money because they're potentially retired, or they don't want to work anymore. You know, we need to have affordable housing. And does affordable housing just mean home ownership, or does that mean rentals as well? I don't know. So, Mosim, if you enjoyed the conversation you just had with me and you like the answers to the questions that I provided, do me a huge favor. Make sure you give me a thumbs up. And then also make sure you hit the subscribe button so you can get notified when I come online. Well, guys, if you don't have any more questions, I'm going to pop off. I just wanted to come on and discuss portable mortgages and see what your thoughts were on it. I am Kevin Jefferson, the People's Lender. Have a great night.